Honorable Minister, the Permanent Secretary, the EVC, the SSAP, our development partners, heads of agencies, my colleagues, ladies and gentlemen. This event, you may not realize, but is perhaps one of the most symbolic gatherings this year, in the sense that there's been a lot of discussions around where we are headed as a nation, especially with respect to social and economic development steps, and also the importance to be productive. And I just want to say to you that if we deliver on the promise of why we're gathered here today, we would all see the impact. It will be very visible. I want to acknowledge and thank the Honorable Minister for his leadership and the vigor with which he's been driving this. I know he's asked for meetings with me and the Minister of Finance several times on this initiative. I see the passion with which he's driving it. I believe that that passion is very vital for the success of this initiative, and I really want to thank you for that. And we're glad to be here. And let me say something here, that for me, this is more than just a MOFI involvement or today, or anything for that matter. Many of you may know my antecedents in the industry. I've been very active, in addition to my finance involvement in the technology space for at least 20 years, right here in Abuja. A colleague of mine just reminded me about 20 years ago, almost 20 years ago, under Obasanjo, when I did indicate that cloud computing and broadband will become a major, major driver of economic development. But we must be very deliberate and intentional about it. It's unfortunate that we had not taken or used the platform of government, especially from a policy perspective, and from a convening platform standpoint, to make some of those things come through. And that's why I'm very excited about the minister taking the leadership role in this, because that is important. It really, even if private sector wants to participate and take advantage of the opportunities, whether we like it or not, when it comes to broadband, government's role is very, very important, because it is not just about creating shareholder value. It is not just running a business. There are social and economic dimension to it. Even the capital structure and the type of capital that you need to invest in that space, it is difficult to mobilize that from private sector alone. And so I hear you, and I hear the concerns you have around the SPV, the governance and the role of government. Let me be very clear. I want all of you to calm down. Calm down. There is nothing to be worried about. There is nothing to be overly excited about or be concerned. We, on the side of government, and I say that authoritatively because I've had several engagements with the Honorable Minister, I've had several engagements with the Coordinating Minister of the Economy. We are very clear in our mind in terms of our direction of travel and where we think we need to go in order for this to be successful. This has to be a business that is successful. And I say a business. It's not a project. It is a business that must be successful. And in order for it to be successful, we need to be very clear that there are shareholders, and it must deliver shareholder value while also meeting the social and economic development goals that it is meant to achieve. And the purpose of today is to really say, as a group, how do we evolve a model that would deliver this promise? Because if we felt that this would be just a government affair, we don't need everybody in this room. We know how to do it. We just sit in the office and we just create it and we put money in it and we move forward. But we know that that is not the path to go. It has not worked before. We don't think it's going to work now. So we need to evolve a different model. And that is why I'm excited that we're all in this room having this conversation. By the way, like the minister mentioned, we have a model that works, which brings both private sector and public sector together to build a business that is successful. NLNG, you may or may not know, is perhaps one of the best examples of that. Over the last several years of its existence, it has delivered at least $30 billion of dividends to government. I don't mean for the other shareholders, to government alone. So it's public sector, private sector, taking advantage of a natural resource that is there, will be there, but has to be delivered using a model that is totally different from the way we're used to doing business. We believe that the same thing can be repeated here. We also have another portfolio company, that is Mofi, called Development Bank of Nigeria. Development Bank of Nigeria started the same way that we're meeting here today. And what was it? It was the recognition that we needed a development, a wholesale DFI that will mobilize capital, cheap capital, and then distribute it through financial institutions for the benefit of individual as well as small businesses that can get loans. Different partners came together. Same, the World Bank was a key driver of that. That's DBN. The World Bank was a key driver of that. Brought together different partners. Federal government was involved. KFW was involved. African Development Bank was involved. And others came later. NSIA was also involved in that. And eventually, we're all shareholders in that business. Today, the federal government or the president does not determine who is the MD of that institution. Neither does the federal government determine who the director should be. The shareholders' agreement is very clear as to how the rules of engagement are, the governance, and how independent directors are selected. There are more independent directors than directors representing the shareholders. Even though federal government owns shares, NSIO owns shares, African Development Bank owns shares, KFW owns shares in that entity. It's very similar to what we're saying here today. An opportunity was identified, but it was very clear that all these stakeholders had a role to play, either as a shareholder or as a lender that would provide funds to be on-lent to customers. It's a similar thing here. So that's what I'm saying. Please calm down. Whatever it is that we believe is required for this to be successful, we will write it into the shareholders' agreement. That will define the rules of engagement. It will define how the CEO is chosen, how the other board members are chosen, who will be the chair and how that will be chosen, including how dividends will be shared. In the case of DBN, the shareholders agreed that in the first 5 years, we wanted to make sure that whatever profits the institution made was re-plowed back into the business. So there was no dividend in the first 5 years. It was in the 6th year that dividends was being shared. But even in that case, the shareholders' agreement determined precisely what percentage of the profit would be shared as dividends, and the rest of it would be put back into the business to grow the equity for the benefit of the shareholders. There's really no reason why the same thing can't be done here. So let me just go through a very quick presentation that I prepared to ginger some of the roundtable discussion that we've talked about earlier on. So, if you don't mind, I don't like standing still. And all right, thank you very much. So I just want to go through very quickly. There's been a lot of discussions around the SPV. From our perspective, let me just share with you some objectives of that. And who are some of the subscribers? I know during the earlier discussion there was the issue around who are going to be the subscribers of the SPV. We'll talk about that. Again, this is not exhaustive, but it's indicative as to who are the potential subscribers of that. Then, of course, what are the seed assets and investments? In this case, we're not starting as if nothing exists. We heard earlier on about the fact that there are existing broadband companies that already have the infrastructure nationwide. We in government already have infrastructure on the ground. And I'll talk about when I say we, so that it's clear to everyone. Of course, the governance structure. What are the elements of the governance structure that we're talking about? and then also suggesting what we see as possible next steps. So when I say we, I'm referring to MOFI, Ministry of Finance Incorporated. Ministry of Finance Incorporated, or MOFI, is the investment arm of the federal government of Nigeria. So we are the shareholders on behalf of the federal government of Nigeria. So when there is a commercial enterprise where federal government owns shares in that, we hold those shares and manage those shares on behalf of the federal government. An example is if you take NNPC. In the case of NNPC, there are two shareholders. There is MOFI and there is MOPI. MOFI is the Ministry of Finance Incorporated, which are the shares that belong to federal government of Nigeria. So we manage those shares. In the case of Bank of Industry, 60% of it is owned by the federal government. We hold those shares and manage those shares in Bank of Industry. Development Bank of Nigeria that I mentioned to you, 60%. Family Homes Funds that we co-own with NSIA. The DISCOs, the 40% that belongs to government, we hold those shares. NMRC, which is the Mortgage Refinancing Corporation. So there are at least 40 different entities. This year alone, we've created at least 3 new businesses where federal government is putting in money and we're supposed to manage those. So the AUM, assets under management, just measured by the equity, is at least 20 trillion based on our 2022 financials. So there's a lot of experience in the room, which is why the Honorable Minister was referring to, based on all these entities that MOFI has and would be bringing to the table as far as this is concerned. Let me be clear, second time. Government will not, and I repeat, will not hold more than 49% shares in this entity. As you know, from a governance perspective, the fact that it doesn't own more than 49% means that it cannot be calling the shots. The group of investors that own collectively the 51% will be calling the shots. So I hope that calms you down. So this is not a business as usual, another government entity. We've been down that route before, it didn't work. We don't think we are going to go down that route again. I give you an example why we can't go down that route. In 1993, federal government established an entity where it was 100% owned by federal government. Put $80 million back then, do your calculation, $80 million in 1993 as equity. Another $80 million as loan to that entity. For the last 30 years, that entity never delivered a single kobo in dividends. The current value of it is nothing to write home about. Clearly, we cannot go down that route. We can't. So what are the objectives of the SPV? One is that this SPV discussion allows us to define what that investment entity is. You're all in here. You're either going to want to be a participant as an equity investor, or you want to extend credit, or you want to be an operator in this entity. You're all stakeholders. You want to determine exactly what is this investment entity look like, and how can I participate? Either as an equity investor, or you're just here to provide a facility, a loan, or as an operator partner. The second is to also make sure that we all agree as to who the investors are going to be and what investments they want to make, what level of participation they want to make in this. And then, of course, the capital structure. My friend from AFDB asked a question earlier on about whether or not we shouldn't be talking about what government is going to put in, but to agree on what the structure is. And I agree with you. From day one, are we starting with saying that the total investment required is $1 billion, $500 million, whatever it is? We agree on that. And then anybody who is coming to participate as a shareholder will determine what the level of appetite is. In the case where government is going to participate, then what does government want to put into this deal? We've already agreed that whatever it is, whether it is in terms of the assets that it brings to the table or any additional financial contribution, the totality of that cannot be more than 49% of the value of that entity. But we hope private sector will play a bigger role not only in terms of the capital to be injected into the business, but also in terms of the operations of that business. So it is key that as we define this SPV, let's agree on what the initial value of this business should be. And again, to the minister's point, the idea is that this should stimulate the discussion that by the time we leave here, we have answers to some fundamental questions. One of them being, what is the initial value of this business? Are we starting with $1 billion business because we know that with $1 billion we have muscle and we can drive this business very quickly and deliver on the impact that we need and also deliver shareholder value from the very beginning? Who do we see as potential or possible subscribers to this business? The first is private sector. The first private sector and institutional investors. And the structure we put in place will determine the appetite that private sector will have. So we see them as a major stakeholder and a shareholder in this business. And of course, private sector includes institutional investors. The second are the multilateral development institutions. And this is key because we believe that the type of capital, in terms of the tenor of the capital, as well as the cost of the capital, that we need for some elements of this infrastructure is likely to come from that community. So we see them as a second very important partner in this business, which of course includes the AFDBs of this world, the World Banks of this world, the IFCs of this world, the Islamic Development Banks of this world. The third is federal government, MOFI or Galaxy Backbone. I'm sure for many of you, we already have fiber infrastructure. When I mean we, Galaxy Backbone, federal government, already owns fiber infrastructure in different parts of the country that we invested. We believe that this is will be of tremendous value to this SPV if part of that fiber is rolled over to that SPV as federal government's contribution. It means from day one, that SPV is in business, even before the others bringing the capital start rolling out to other portions. You do not want, and I say this again, in this day and age of short supply of capital, you don't want to raise money and stay for 5-7 years before you start delivering value. Many investors are not that patient. So our view is that the investment from government is also going to be very strategic in allowing us to begin to deliver very, very quickly before the rest of the country would be covered by fiber. And of course, we see the subnationals are potential subscribers to this SPV. Increasingly, many of the state governments are beginning to become interested in finding ways to invest either capital or other assets in return for dividends and returns going forward. So, Honorable Minister, I believe that this is one potential shareholder that we should also consider as we look at this. Some of the states down south are already looking at investments in that space and hosting that, especially the submarine cable parts. I'm sure you know the state I'm referring to. I believe that for some of them, they may also be interested, depending upon how we package the deal and sell to them. And the more of them we get involved in it, the better for us, because it means that they will see themselves as shareholders and they will protect it. What are some of the things that I believe that federal governments can bring to the table? Our existing fiber network that I mentioned, real estate assets, different locations depending upon where you want to site your operations. We also see right-of-way as a potential contribution to this. And of course, there may be others as well. In addition to the policies that would foster the growth of this business. The fact that the minister is in this room indicates the political backing that is needed for such a pivotal project. I believe that that is an additional value that is priceless. I also believe that the fact that the Honorable Minister of Finance and the Coordinating Minister of Economy was here today to speak about this and how it relates to its function is also a vital contribution to the success of this project. In the sense that if we're going to use any multilateral development agency or institution's financing, he would have to sign off on that. That is what is brought to the table. It allows us to be able to have access to low-cost capital and long-tenor capital, which is patient capital, that can be brought to bear on deals like this. Governance structure. Governance. Advisory board. I spoke to the minister. I believe that he's already identified some people that he would like to bring in as a pre-operational advisory board. These are people who understand the industry, and we believe that their involvement at this pre-operational stage will be key in creating the right framework, the right structure, the right business model, identifying what are the potential risks, and putting in place the mitigants for that. Shareholders, those who would eventually become subscribers to that business, would have a say. And there are responsibilities and privileges that are the exclusive preserve of shareholders. It is important that we clearly define those from the beginning. I can tell you that one of the things that we observed during the restructuring of MOFI was that there are responsibilities that only shareholders can make. But when you do not have shareholders who understand their responsibilities and do not do those things when they ought to do them, it has a way of destroying value in the entity. It has a way of slowing down things. It has a way of not even having an oversight over the board of directors. Remember, the shareholders will typically appoint the directors of the business or the board of directors. So do the shareholders understand what it means to have the board of directors and only appoint people who are not just there to warm the benches or to collect sitting allowances, but they are there to add value? Because being on the board of any entity is a lot of work. If you want to do it well and deliver value, it is a lot of work. So we want to make sure that we have a board of directors that have people who understand why they are on the board, they are committed to it, and they know that it is not just to put it on your CV, but because you're there to do work, to create value. You are there to represent the shareholders. And at some point, you would have to render account of your stewardship as the board and members of the board. The executive management, leadership. Again, it depends on how we want to run this. Whatever the case, the leadership team has to be well thought out, and the qualities of it will have to be thought out. And the process of how to choose those who will lead the entity also has to be defined in the shareholders' agreement. That way, you're not leaving anything to doubt as to how the MD will be chosen, how the EDs will be chosen, and other members of the leadership team should be chosen. That also would have to be defined very clearly from the beginning. I believe that that is also a fundamental aspect of the governance that we need to define. I've also included here what I see as the technical partner or the operators of the business. Again, it depends on how we want to approach this. If we believe that there are entities that have demonstrated capacity, competence, and the financial muscle in this space and are willing to partner with us to be our operator, then it is something that we need to consider. We always say in MOFI that we're very clear as to who we are and who we are not. We are not operators. We do not believe that it is in our best interests or our shareholder, which is the federal government, for us to be operators. So we seek to partner with teams or organizations that will be the best operator of the business, who are very clear from the very beginning as to what their responsibilities, what their roles are, which is deliver shareholder value, while you also deliver on the expected impacts, both social and economic impact, especially at a time like this where we are. The minister, the PAMSEC, as well as the EVC know this, that as much as we shout and celebrate the fact that Nigeria has one of the highest number of users of the internet, the fact remains that in terms of conversion from the presence on the internet and economic value created by that, we are one of the lowest. In other words, many businesses that are present online are not converting that presence into economic value or even impact on their business and the bottom line. How many of the companies that have websites or are present online actually use their platform to fulfill orders for their customers? How many of them use it to do more than just being present on the internet. Until we begin to convert our presence on the internet to economic value that can be reflected on the balance sheet and the financial statement of that business, then we are not using that infrastructure to the fullest extent that it ought to be used. So as we go through this, the key point is, who are those companies or the partners out there that will help us deliver shareholder value, as well as ensure that we are getting the most benefit from a broadband infrastructure. What are some of the next steps that we see? The first, I think this has been mentioned before, it's about the feasibility study. This is not rocket science. We're not starting from ground zero. It is not as if there's no fiber. But the minister is very clear in his view as to what he would like to see, or what the government would like to see. The question is, how do we get there? The feasibility study allows us to identify precisely where we are, where we're going, and how do we bridge that gap? What is the most effective way to bridge that gap? The feasibility allows us to determine what exists right now, especially in terms of what government owns and what private sector owns with respect to the footprint, the fiber footprint nationwide. Where is the opportunity? We heard earlier on that the issue is not so much about the long distance coverage, but more on the last mile, fiber to the home, because that's when you start getting to the customers. It is the usage of the customers that begin to justify the investment you would have made in the long distance infrastructure. The feasibility allows us to do that. There is also the issue about the financials of it. We heard from NCC around ensuring that we are competitive. We have to consider pricing. How do we bridge the gap between the metros and the rural areas, the served, underserved areas? Are we going to roll our fiber to the unserved areas that are not commercially viable? How do we get paid for that? These are fundamental questions. Because if we're going to talk about the fact that there's a linkage between this rollout and social and economic development, then we have to make sure that it is not just about rolling this fiber to areas that are considered to be commercially viable. It is also rolling it out to areas where development is needed, especially when we talk about agriculture, education, healthcare, rural communities. To what extent are we going to roll out this infrastructure to those communities, even if they're not commercially viable? What will be the incentive for this company to reach out to those? Will there be revenue shortfalls that will be made up through any other means? I know there's USPF, so if you see, now again, I don't speak as government this time, I speak as a business person. So I'm saying, if I'm going to roll out this fiber in my village, in a very rural community, where I know that the revenues that will come from there may never ever justify the cost of that infrastructure. Yet, the people in that village are Nigerians as well. And they're entitled to having access to that because, again, as you know, broadband is almost a fundamental human right these days. If we want to enforce that, who bears the shortfall on the financials? Again, these are conversations we must have if this is going to be successful. And that is why we say that this investment is unique in the sense that it is not a pure play commercial venture or financial venture. It has both social and economic dimensions to it that we need to think through very well. And that's why we cannot do it without government involvement in a very strategic and deliberate manner. We also believe that the business model needs to be well thought out so that we're going into the business wide open. And no investor should come in there thinking that you're going to make your profit in 2-3 years' time. That may not be the case. That is why we talk about patient capital. But what business model allows us to achieve that? Number 3, pre-operational leadership team. I know the minister talked about the fact that there is a team that would help lead this effort. Because what we do not want is that when we meet like this, everybody talks, make nice speeches, there are no notes that are taken, no lessons learned. We're not capturing the lessons from there to put it in together and drive that. That is what I would see as part of the role of that pre-operational leadership team. If we're going to engage advisors, the advisors are just advising us. They will not execute. They will not be the repertoire of the outcomes of those engagements. We need a team that owns that. And in many cases, under those circumstances, some members of the pre-operational team would transition to become members of the executive team at some point. That is something we have to bear in mind, because we cannot draw a straight line between the pre-operation and the operational side. Because as you are involved in this process, you gather a lot of knowledge, a lot of skills that will be needed when it's time to execute and run the business. So that team is absolutely important. Who are the promoters? I know we have a lot of stakeholders in this room today. Everyone, I believe, has a different expectation. Whether it is developmental, it is financial, it is economic, social, whatever it is important that we agree as to what everybody's expectations are. I know some parties may be here just to help facilitate this process, get the stakeholders together, raise the level of awareness, and get the business started, but they're not interested in becoming shareholders in the business. That's fine. So long as we know and we know their expectations, it helps us to structure this properly. There are others that are not interested in being equity, holding any equity. They're interested in the debt, in providing debt to that entity. If that's their expectations, that's fine. The question becomes, how much debt are you willing to put in there, and what are the expected costs of that debt? Then, of course, advisors, legal advisors, financial advisors, project managers, technical advisors to be involved. We need to look at getting those on board as quickly as we can. I know some of them are already, some of our development partners are already playing that role. But I think it's important that we formalize that, and for areas where we have lack or we have holes, we need to do that. Timelines. We've talked about 9 months. 9 months is not a long time. The question is, do we have a Gantt chart, and have we determined the critical path as to what are the key things that are on that critical path that we need to begin to deliver right now if we're going to meet the 9 months timeline? It may be aggressive. I think it's practical. I think it's realistic, because we do not want to delay this until when it is almost the end of this administration and we're trying to rush things at the last minute. When you do that, it really doesn't work very well. So it is important that we're very clear as to what our timelines are, what the deliverables are, who the key partners are, what's the critical path, and what are the items and the activities on that critical path that we must stick to those timelines if we're going to meet the 9 months timeline that have been set for us by the minister. And of course, we need to have a business plan that paints the direction of travel as to where we're going. So we believe that a consideration of these factors would help us move a step closer to where we're going. Thank you very much.
Can I ask the first question?
Please go ahead, Honorable Minister.
And of course, it's not a question. I just wanted to say, ladies and gentlemen, that is your shareholder, not myself. Because, it's been clear that anything the government decides to do in this investment is going to be held by MOFI. So even the structure, most of you have not met with Mr. Armstrong on this conversation. But moving it forward from today, MOFI will be a central part of that conversation. The ministry, of course, from a developmental point of view, will take responsibility, but MOFI will be involved. And you can see the level of clarity. I've said some of these things perhaps not coherent enough, but you can see that it's very clear from our side. Decisions have been taken. This is not typical. We've looked at this. We're not interested in anything else but getting you to feel comfortable putting your resources into helping us achieve this developmental objective. That's all it is for us. That's why we've created a structure that gives you all the power, the belief, the confidence that you need to be able to support us to get this done. And I think we should give him a round of applause for a fantastic presentation. Thank you so much.
Yes, ma'am.
No, thank you so much for your presentation.
No problem.
It was so thorough, so detailed, so well thought through, very comforting. It was really great to hear you speak through just the processes and just the transparency, and just it's clear that there's a lot of experience there. And I think it's going to be great being able to continue to work with you. And I liked what you said about not just speeches, like what is the action plan? When my boss was leaving, he said, I hope it's not going to be a bunch of other meetings, like we're going to be able to start taking concrete steps. So it's great to see they were in alignment.
Sure.
I just had a quick question.
Please.
On the presentation when you talked about the assets. I think it does make sense.
Sure.
Like you said, there's a lot of fiber. When we looked at an assessment of fiber in Nigeria, you actually have, combined with the energy sector, telecom sector, the roads, there's actually a lot of fiber that covers
Absolutely.
basically the entire country.
Correct.
Right? And one of the things when we had been looking at the sector for Galaxy Backbone was that there was a lot of fiber. It was just not always going in the direction that private sector were interested in at the time. Having access to, and that could also be as an issue related to co-location or wholesale access and other things like that. It may not just be related to that. And I'm just curious, as you mentioned this, part of this process would also look at, if you're looking at taking the assets, there are also liabilities that are attached to that, right? Loans, etc. And I mean, the way you've spoken is clear that you already have a plan for that, but just wanted to get a sense that this is also part of the full. And I just ask now, and I'm not trying to put you on the spot, just because we want to have concrete action steps as we move forward. And when we consult with the private sector, a lot of times there was a lot of nervousness when we mentioned Galaxy Backbone or other government-owned entities where they were not sure if they were comfortable investing. But the way you talk about it, it's insulated. There's a process, there's a governance structure, there's a board. So regardless of these assets, there's an insulation. But I'm just curious about, have we thought about those liabilities as well? As we have people in the room who are going to leave today and have already had their viewpoints, and it may be hard to get them to retract.
We have.
Okay.
We have. So let me be very clear, right? In the case of this, the Galaxy Backbone, the asset, the investment was established using facilities from China. But the plan is to capitalize the assets into an entity, and that will have its own balance sheet, would have its own financial statement. And government is simply a shareholder who, as a shareholder, is expecting that dividends will be paid to it by virtue of its shareholding in that entity. Again, in terms of the specific way that we would transfer those assets into this SPV, those are all mechanics that we need to define from the very beginning. At the end of the day, the net is whatever you have as asset, and the liabilities is netted out, right? So I don't think that would be an issue. We certainly, on the MOFI side, it is something we've spent a lot of time thinking through and acting already. In fact, it was on the basis of that the Honorable Minister said, let's have this conversation and say, how do we make sure that the federal government can participate in what we consider to be a landmark business, that if we run very well, will perhaps become a great Pan-African business as far as fiber infrastructure is concerned. I won't be worried too much about that. I think it is something that we can always work out, which is why I talked about the feasibility. I talked about the business plan. I talked about the capital structure, right? Because all of those things will make sure that there is clarity as to what each party is bringing to the table. I wouldn't worry too much about the liability that you're referring to, as far as this is concerned. The importance of this, the symbolism of it, overshadows any of those concerns. Any other questions? Yes, sir. Can somebody give him a mic, please?
My name is Dr. Ibrahim Omar from Islamic Development Bank.
Fantastic.
From the structure of this is usual, we can say it's Islamic compliance, Sharia compliance, so there's no issue with that because fiber optic issues and the business. From our own perspective, we are willing to be part of this very important landmark achievement, but we need to have very clarity in the feasibility study, especially as regards the risks and its mitigations.
Sure.
We also want to see a clear, more market analysis, and then what the role of government, especially in de-risking the business and also the social responsibility, as you clearly stated that when it goes to my village, which you may not have clear monetary important, but it is a social responsibility because it is now a human right. So we need to have that details. Our Islamic Corporation, which is ICD, is interested in such type of business, and they will definitely participate. But you need to provide all this clarity, which I think is from your speech you made. It's very clear that it's coming.
Sure.
Thank you.
Thank you very much. By the way, in December last year, just before New Year, I was in Jeddah to meet with the ICD. Again, identifying potential partnership opportunities. So I'm really glad to hear that from you. You're quite right. I think one of the things that we are very clear at MOFI is the following. You know, prior to the restructuring of MOFI that happened last year, a lot of the investments that we made as a nation were more opportunistic than strategic. And I think the symbolism, another symbolism of what the Honorable Minister is doing through this forum is that we're not just being opportunistic, we're being strategic by saying that there is a strategic direction of travel, that fiber has a role to play as far as our economic development is concerned and social development is concerned. But it is important that we all sit down as key stakeholders to define and agree that this is how we want to travel together. We're all co-travelers. So we're going out there with our eyes wide open. It is not because there will be no risk, but we would all know what the risks are and would agree on what the mitigants should be and how we de-risk the project. So that's one that I want to speak to. Then you also talked about the whole idea of meeting the requirements and seeing the feasibility. Again, that was the other thing we observed in MOFI prior to now. A lot of the times we make a lot of noise that we are seeking for investments. But investments go to well-structured projects where the feasibility has been well done, the risks have been identified, and all the de-risking mechanisms and instruments have been put in place. The returns, how much capital or investment required is clearly defined. The returns are also defined, bearing in mind the macroeconomic reality of the environment. So the investor is going in there clearly knowing what is it that they're investing in, what returns they should expect, what risk they are taking by going into that investment. That is why that whole idea of feasibility comes in, as well as the business plan that I mentioned would come in as well. So, again, this is a discussion that we started. I think, we'll move forward to that. But I'm really glad that, the Islamic Development Bank will be interested in this because that, again, there are specific types of funding and capital that only the likes of your institution can bring to the table, that even private sector cannot bring. So everybody has a role to play, and I'm glad that you're here to express that view. Okay. Thank you very much.
Thank you very much, Dr. Armstrong Takang, for your very calming presentation. And I think we will come up with quite a lot of clarity